Let's run you through the guest lineup over the next half hour. Well, Manishi Raychaudhuri, Managing Director and Head of Research at BNP Paribas Securities, joins in. On the charts, Sandeep Wagle, Founder and Managing Director at APTA Technical Advisory Services, as well as Mayuresh Joshi, VP Institution at Angel Broking. I want to come to you, first off, Mayuresh, with your view on how the overall macro picture is impacting the markets, because clearly there are a lot of fundamental problems which remain as an overhang, particularly when it comes to the currency, and this kind of an up move in the market certainly isn't convincing anybody.
Evening, Ivan. Yes, I think the currency is possibly the weakest link in the whole chain of events leading to degrowth in the corporate earnings, if I may put it that way. Having said that, I think the currency obviously is dependent on a lot of factors, both domestic and external as well. The exchequer obviously is trying to put in a lot of moves to arrest the volatility in the currency movement vis-a-vis the dollar. But having said that, I think you're still left to what the Fed does possibly in September. I think if Bernanke actually starts reducing and tapering off, I think you're going to have more dollar flow go through, which effectively will mean that the rupee will come under pressure as well. Having said that, I think the liquidity measures that RBI is pushing through every Monday, I think 22,000 crores getting off, will suck the excess liquidity away. And the excessive bond issuances that the finance minister is doing will also take some amount of deposit base away from the bank deposits to possibly the PFC spaces and the RECs of the world. So in that sense itself, I think the financial space should underperform. I think the corporate earnings have been subdued. Whatever we have seen in terms of the capital goods engineering earnings so far are as per market expectations. I think no great set of numbers expected from them. I think higher interest cost, capital cost and finance cost is going to take a toll on these companies. So obviously the IIP numbers are going to be worse off than what a lot of people are expecting. Right. I think the numbers are expected today in the latter half. But again, I think that is clearly indicating subdued demand, supply constraint, corporate pricing power just not being there. So in our sense, I think the corporate earnings will remain subdued for the next quarter as well, I think, which will drag the indices down from the current level.
Yeah, I guess at the current juncture, it's very easy to make a bearish scenario because nothing seems to be going our way. But Sandeep Wagle, here's the good news. And the good news is that bulls once again have managed to defend that line of 5,500 on the Nifty. How crucial is that? How important is that?
Well, it is definitely important. 5,500 has been a prior swing low that had happened in April 13. So from that point, if it moves back, if it moves up, it is certainly not a coincidence. Though, as I have been mentioning, I am very clearly watching a level of 5,400 according to me, which is a strong support. So even if 5,500 is taken out, I don't think 5,400 will be broken, and we are talking of 5,400 to 5,600, 5,620. Or probably 5,650. I don't think 5,700 will be tested and crossed. In that case, only will my opinion change, and then I would look at a 5,950 or so. So limited upside, limited trading upside is what I would talk of, and nothing beyond that. And even in a market which has, in the Nifty, which is holding on today, the Bank Nifty is given way, and that indicates that sooner than later we will be in for a downside move, and Bank Nifty or probably the banking stocks will lead that fall. So I am not that greatly enthused by the move that we have seen today. Yes, individual stocks, there could be stock specific moves, but overall at higher level selling will resume.
Manishi, the fabric of the market is certainly looking very weak. Everything is on a butcher block. FIs are exiting. Everyone's running for cover. And it seems the only space they're hiding is IT and pharma.
Yeah, in general, I would say the exporters, IT services, pharmaceuticals. There are a couple of merchandise exporters as well, particularly in the auto space. Bajaj Auto has issues of its own pertaining to the labor problems. But Tata Motors, which is another foreign exchange earner, that seems to be doing reasonably well. And particularly, over the last couple of days, the luxury car sales from China came out. And the likes of Benz and BMW, they're doing phenomenally well. So I think there is a rub-off effect on Jaguar Land Rover as well. So I would think that's a very small set of stocks that investors are focusing on right now. And given the current state of affairs, it may continue for a while.
Okay, let's look at individual stocks now. And the stock of the day clearly has to be Sun Pharma. They came out with an excellent set of numbers. Margins are stable. The management is confident, even though the domestic end of the business for Sun Pharma for the quarter gone by did not grow, but it's the US business which clearly is holding on very well for Sun Pharma. So for the quarter gone by, nothing became from Taro, nothing became from India, but their sheer outperformance of the global generic business from US is so strong that it is taking care of really growth momentum for Sun Pharma. Mayuresh, an expensive stock, but this company is delivering quarter on a quarter basis. Do you think it is still time to buy into Sun Pharma even though optically it is looking expensive?
Yes, Nikunj, I think from a valuation perspective, Sun is looking expensive. But if you look at the structural point of view, I think even up to the one-time settlement, I think the kind of cash flows that will come into the business from the US side, and we've seen in the numbers that the US side of business has performed extremely well for Sun Pharma. So in that sense itself, I think from a structural story point of view, I think Sun Pharma looks like a good bet within the pharma space. Yes, valuations are expensive, so if the stock declines, I think an investors having a 2 to 3 year perspective can definitely start entering into Sun Pharma. The point to note again is from a domestic perspective, I think the drug pricing policy will also not have a substantial impact on Sun Pharma's earnings. So once the domestic market improves and the US market stays on a sustained growth path, I think Sun can give sustained earnings over the next 2 to 3 years for investors.
Let's get in your reaction then to the numbers, Mayuresh. SBI disaster set, no surprises there. We weren't going on with great expectations, but asset quality deterioration, the restructured assets high. What do you make of it?
Yeah, nobody was going on one with a good set of numbers from SBI, as has been the general trend with the PSU pack. I think increase in gross NPAs, I think the net NPAs came at around 2.83% compared to a 2.10%. So in that sense itself, I think there is pressure on asset quality for SBI. I think the provisions though came in a little bit lower, but again I think one needs to understand the restructuring book that SBI will possibly go ahead and start booking. Again, quarter 1, quarter 2 are traditionally weak quarters for the banking sector, and in that sense itself, I think with the management change going on in SBI, that can have some amount of ripple effect onto the stock. So in our sense, I think the numbers were way below our expectations. So in that sense itself, the stock should correct going forward as well. And generally, I think the PSU pack, along with a few of the private sector names within the financial services space, should underperform for the quarter and the next.
Sandeep, what do you make of today's price action in metal stocks? Dead cat bounce, or now some of the metal stocks have a trading bottom in place?
Nikunj, I would talk of some more upside, especially at Tata Steel, the way it has held on in terms of price and supported by volumes. I would talk of a 3-4% trading upside. So it will be a little more than a dead cap bounce. I mean, if it holds and if Tata Steel manages to hold about 250, then the weekly pattern also changes. So it could be a little more than a dead cap bounce. I see a 3-4% trading upside, which can maybe at that point in time be taken to a 7-8% upside. So I am not that bearish in the metal space looking at today's pattern.
Okay, that's a call on metal stocks. Banking, they remain the big laggard for the day, and the Bank Nifty also cracked down in the session by over 100 points today. What do you make, Manishi, of the banking space? Do you think it's too late to panic when it comes to financials? A lot of the price damage has already been happened?
Yeah, in general, I won't comment on stocks specifically, but in general, we think that for the PSU banks, the asset quality risk is going to haunt them for a few more quarters, at least I would think about 2 to 3 quarters. That is, till the end of this calendar year. So, I mean, even though these stocks have declined massively, they have underperformed seriously. We are not yet venturing into, the PSU bank universe, lock, stock and barrel.
Sandeep, along with banks, the other heavyweight which was under intense pressure today was Reliance. Now, Reliance clearly seems to be exhibiting signs of cracking down. Do you think in the short term the tide has reversed for Reliance, and rather than being a buyer on every dip, one should be a seller on every uptick now?
Nikunj, frankly, till Reliance breaks 825 at a current level of 845 or so, I would say a limited downside. Sideways to down, yes, I am not seeing strength in the stock, but I don't see Reliance going down to 760, 770, which is a more than a 10 to 12% downside. I don't see that kind of a move. If you are talking of some weakness, yes, maybe 20-30 rupees, which is a trading 2% play for FNO. which I am not very keen to play on. I would say sideways is what my call would be as far as Reliance is concerned. I think buying will come in, and on the upside it will be difficult for Reliance to cross 880, 885. So 830 to 880 broadly will be my range for Reliance.
From M&M, we're expecting a pretty good set of numbers this time around. The net sales are seen higher by 9.4%. Margins are expected to expand as well. And Mayuresh, run us through what your expectations are from M&M.
Yes, Aman, I think the top line is expected to come around 10,400 odd crores. I think more or less abetted by the tractor business. I think we're estimating the quarter gone by to show a good amount of price as well as volume growth, and that should sustain for the next quarter as well. The weak link again would be possibly the UV sales, more or less to do with a combination of factors, including the duty hikes, the competition pressures, and again the input cost pressures. So in that sense itself, I think the PAT is expected in our estimates to come around 850 crores and margins of around 13%. So the number should be quite positive for M&M. I think if M&M disappoints on any of these numbers, including its overseas subsidiary Seong, which has shown some amount of resilience in the past few months with sales around 12,800 odd units, I think that should sustain the bottom line for the company going forward, reduce losses at its overseas subsidiary. So I think we're expecting a decent set of numbers, and the stock should react positively in our opinion after the results come in tomorrow.
Lots of stock recommendations. We'll start off with the dealing rooms, and Pranay joins in with the list of stocks. Pranay.
Well, the first stock to keep on your radar is Tata Steel, and as per the 18-hour poll, we're expecting a 19% drop in profits, 3% decline in net sales, and a 1% cut in operating margins to come in at 9%. But dealers are hinting that the chorus earnings may surprise positively with improvement expected on the operational front. So we might see a higher figure of $35 of EBITDA per ton instead of pessimistic expectation of $20 per ton. Also, we've seen significant build-up of net longs in the counter post the upbeat Chinese industrial data, and that has raised the optimism amongst all the metal counters as was seen in the trade today. So dealers are recommending a buy over here, as they've also indicated aggressive accumulation by the HNIs. Next one is SBI, where the poor operating performance dragged by surge in slippages as well as asset quality challenges clearly saw it tumbling to a fresh 52-week low today, as funds have already started trimming their holdings to the stock. So dealers are expecting brokerages to cut targets in trade tomorrow, and that will have a significant impact on the stock going forward. So therefore, dealers are recommending to short the stock on every rally.
Right, Pranay. Thanks a lot for that. Sandeep, what are your top ideas for tomorrow morning?
Nikunj, as we discussed, the metal space is looking good. I would have a buy in Jindal Steel, stop loss 220, target 242. And the banking space is looking weak, so I would go short or have a sell in ICICI Bank, stop loss of 884, target of 830.
Alright, those are some of the technical picks, but Mayuresh, just wanted your opinion if you're seeing any kind of a trend when it comes to the consumption theme. Marico, Britannia, Jyoti Labs, all spectacular set of numbers.
Yes, Aman, I think they did post a good set of numbers, but again, going forward, I think one should understand that the gross margin expansion can be a little bit subdued, more or less to do with new product launches or slate launches getting a little bit off the hook. The ad expenses as a percentage of sales will keep on going up, and again, I think one important component is the discretionary demand. So the discretionary demand should continue in a robust manner going forward. So in that sense itself, if that continues and the rural demand comes back in a big bang, I think all these stocks should perform well. So within this pack itself, I think we like ITC from the large cap names, and we do like a Dabur and an Imami from the mid cap FMCG basket.
Manishi, you have a buy call on Tata Motors. Now, Tata Motors last week came out with excellent set of numbers. Margins expanded, JLR margin expanded from 14% to 16.5%. But despite robust set of numbers, Tata Motors is still languishing. It is still languishing below 300.
God knows, really. And, market has a mind of its own. And I suspect, it didn't really match expectations from some quarters. But I think, it's likely to recover, because if you take a slightly longer term view, then Tata Motors, with about 80% revenue coming in from the JLR side, and JLR numbers improving both in United States and possibly bottoming out and recovering in China, it seems to be a decent bet over the longer term. So I wouldn't be too concerned about how it behaves on a day or two, over the very short term.
Okay, we'll leave it at that. Thanks very much, Sandeep, Mayuresh, as well as Manishi for taking time out and joining in on this leg of markets tomorrow.